Hi, this is Alan Gassman. Welcome to Wednesday, July 8th, 12:30 p.m. Eastern Standard Time. I am here in the Gassman, Crotty, and Denicolo studios, if you want to call it that, with Brandon Ketron. We work together as estate planners and tax lawyers. That's what we used to do. Now we just do PPP law. And we are here with one of the most brilliant people I know, Kevin Cameron. He is a certified public accountant. He is a partner in his CPA firm and a leading authority on PPP, not by his choice, but because he invented an amazing spreadsheet that Brandon and I couldn't live without. So we helped him make it even a little better. It's probably the only spreadsheet you've ever used that actually writes a letter for you at the end using all of the information. And I'll stop bragging now. We've got a few free webinars coming up. Our law firm presents a lot of these. If you send us an email that just put the word webinar in the RE line, then we'll automatically enroll you in the rest of our emails for the rest of your life until you tell us to stop, or just let us know if you want further information. If you happen to want to buy the spreadsheet, I hope you do, I hope you do, I hope you do. There's a lot of information here on it. There's a really good 4-minute summary video that's free, a 46-minute walkthrough video that's free. And at the end of this 30-minute session, Kevin's going to put the spreadsheet up on his screen and show it to you. You don't have to stay for that, but it's really been helping a lot of people because the spreadsheet itself serves as a checklist for what you need, and it also basically tells you the rules for each line. When you put your cursor on it, it tells you the rules. It is the best spreadsheet ever built in the galaxy, to our knowledge, and our friends at Lineberg Services endorsed it. We were very, very pleased with that. We're really proud of it, but I've probably said enough. Page 6, before we get into the PPP rules, we want to talk about just a little bit about the EIDL loan rules, because as you may recall, there was a big hullabaloo over whether you could get a PPP loan because it had to be necessary to support your business. So remember, they came out at first and said, everybody come get this loan. And then they came out and said, wait a minute, if you're really wealthy and you've got all the cash you could ever need, then you should not get this loan because it will be a criminal offense. And then they said, well, if you borrowed less than $2 million, the SBA isn't going to question it, but it still may be questioned by somebody. And that's where we stand on that. And there's a Forbes article I wrote on necessity. If you go to Forbes or just Google Forbes Gassman necessity, then the article comes up and talks about that. So the question is, now the EIDL is making some very large loans. And in order to qualify for the EIDL loan, you have to put under penalty of perjury that you have had a substantial economic injury. Well, just about everyone I know has had a substantial economic injury from the COVID-19 virus. But the law is not always what it appears, because the EIDL is an SBA loan, and the SBA rules describe substantial economic injury as, number one, an injury such that a business is unable to meet its obligations as they mature or to pay its ordinary and necessary operating expenses. That's necessary, that if you don't have this, you may have to close your doors, or you would have to close your doors, or at least without this, you can't pay your normal expenses. Number two, a loss of anticipated profits or a drop in sales is not considered a substantial economic injury. So especially those out there who are advisors, if you're getting this loan, you need to make sure you really think carefully as to whether you need it, especially if you're all pumped up with PPP money and your business is recovering. I would think twice. Now, if you took the EIDL loan, what can you use it for? And you can use it for all the things you see here on page 8. You can use it for normal operating capital, normal working capital, I mean, which is normally anything you reasonably need in a business. But it's not to buy a fancy car for yourself. It's not to get a bigger dividend, that's for sure. And it can specifically also be spent on fixed debts, which they say rent is a fixed debt. The SBA certainly looks at things different than the rest of us. Payroll, accounts payable, and bills that could have been paid if there had not been a disaster. But again, no dividends, no bonuses to the owners, no repayment of loans, etc., etc. So the next news, and everybody's aware of this, the June 30 deadline to get a PPP loan, guess what? It was extended. What a surprise. It was extended to August 8th. In the Senate committee hearings, it was made very clear to Treasurer Muchkin that a lot of minorities and small businesses were not able to apply for this loan. It was too complicated to apply. It was not reasonably explained. And more importantly, they could not find a bank to get them the loan. If they had been fortunate enough to be working with one of the larger banks or a mainstream bank, they would have gotten the loan, but because they work with small community banks that were not equipped to allow the loan to go through or to even apply for it, they didn't get their loans. So there's a lot of people out there who should get their loans, especially those who file Schedule Cs. If you filed a Schedule C for 2019 as a contractor, your loan is pretty much automatic and your forgiveness is pretty much automatic. Like right the moment you get the loan, it's been forgiven. So that is described in the last Forbes webinar or the last Forbes article. We're not going to spend any time on it. Brandon, I'm going to turn this over to you now to explain where we are with the PPP rules.
Yeah, so we had some updates on June 22nd, and this is really the most recent guidance that applies for majority of barters. There was some guidance on June 25th related to fishermen and their crew members, but haven't received much since then. But on June 22nd, what they did was allow borrowers that have spent all of their money to go ahead and apply for forgiveness. You don't have to wait to the end of your 24-week period to apply. Once you spend everything, you can go ahead and apply and get that loan forgiveness. They gave us some guidance on compensation for owners, and this includes all owners of the business, whether you're a sole proprietor, whether you're a partner in a partnership, whether you're a shareholder in an SRC corporation. You're going to be limited to 15.385% if you're using the 8-week period of your 2019 compensation, 20.833% for the 24-week period of your 2019 compensation, and that's maxed out at $100,000 annualized. So for the 8 weeks, your max is $15,385, and the 24 weeks is $20,833. And we'll go through that in some more detail in the next few slides. They also gave us guidance related to the rehire exception and whether or not you have to keep the same level of employees on your payroll during the 24-week period. As we know, if you receive this loan and you reduce the number of employees that you have, you also get a reduction in the amount of your loan forgiveness. Now, there's exceptions that apply where you don't get a reduction of your loan forgiveness if it was due to you having to be closed because of some guideline issued by the CDC, HHS, or OSHA. What wasn't clear is whether or not the state orders that shut down businesses would also be included in that. And this guidance said that yes, it was, because those state orders are based upon that CDC guidance. They also gave us some additional guidance on the documentation that we have to retain to meet these safe harbors and to meet these exceptions. That's detailed in the loan applications. We won't touch in detail on that, but for the most part, these have to be written records of the inability to rehire someone, a written record of a rejection of an offer. If you are relying on the CDC guidance to not get back to full level employment because your business was closed, you actually have to go to the guidance, find the paragraph that's related to your business, and circle that paragraph and submit that with your loan application if you're relying upon that guidance. And I'm sure we'll get some further clarity on these issues as we progress through the loan application process. Kevin Allen, any additional comments on those items?
No, and for those of you listening, we will repeat everything that Brandon just said. We'll go through in a slower fashion in the next 15 to 20 minutes. So don't give up on us. Kevin,
I agree.
Do you want to take us through page 14?
Sure. On page 14, Alan's group has done a great job of kind of summarizing all of the different limitations we're aware of with respect to compensation to owners, owner employees and non-owner employees. We want to emphasize that as of right now, owner employees are discriminated under the forgiveness application process because their compensation is limited to 2.5 times their 2019 compensation, or that $20,000 833 number if you go out 24 weeks. Now, Brandon mentioned a little while ago that we can put in an application for forgiveness sooner than 24 weeks. The problem with that is we don't know what the caps will be for those shortened periods. We're still waiting. We thought by now we would have heard some guidance from the SBA on that. Brandon and I kind of joke about that almost on a daily basis about the fact that we haven't gotten any new information. So, but for right now, it looks like that as long as a business goes past about 10.6 weeks, which is technically 2.5 months, then the cap for the owner employees should remain at that $20,833. The other issue, Alan, that's been very confusing for people is, do I include health insurance or do I not include health insurance? Do I include retirement plan contributions or do I not include retirement plan contributions? And this schedule does a great job with explaining that very easily. Independent contractors that are sole proprietors and so forth do not get to include their health insurance or the retirement plan expenses, because those items are not deducted on the Schedule C. They're deducted on page 1 of their personal tax return. So the Schedule C net income that the loan was based on is technically before those deductions. That's the logic in that. However, a lot of people who got the loan were able to add their health insurance and the retirement plan contributions to the loan amount. So for those self-employed people, you might still have to do a little bit of math to figure out if you can get 100% loan forgiveness. But as we've covered in some prior webinars, we've been able to kind of figure out that it's almost impossible not for a sole proprietor to get full 100% loan forgiveness unless the loan amount originally was wrong for some reason. And we've seen a number of those, haven't we, Alan?
Yes, we have. Absolutely.
Good. So, and then with the retirement plan expenses, we get a little confusion there as well, because the SBA told us back in June that the retirement plan contributions for owner employees that we can use for the forgiveness application is limited to 2.5 months or 2.5/12 of their 2019 contribution. But we've all agreed on a number of occasions, we don't know if this is actually correct, because it's only really referenced in the instructions to the EZ form. So Brandon, any thoughts on that, as far as you think that they'll stick with that, or you think we'll get some clarity on that?
Yeah, I mean, I think we'll get some clarity. As of right now, I really don't know what the rule is. As you mentioned, that 2.5 months limitation is only included in the EASY application. If you look at all the other guidance, all the frequently asked questions that the SBA has published on their website, the instructions to the main loan forgiveness application form, the non-EASY form, that limitation is nowhere to be found. So
Exactly.
We're not really sure if it was maybe left in by mistake, if it just wasn't added in the other application instructions. But if you are close and you're worried about this, just be aware that this limitation could apply. I think for most borrowers, given the 24-week period, you're not going to have to really include retirement plan contributions or significant retirement plan contributions to get your forgiveness, since you have a lot longer period now to apply. But for some borrowers, just be aware that this could be the limitation, especially if you're trying to lump everything into the 8 weeks and maybe apply using your 8-week period versus the full 24-week period.
Right. Yep.
Now for non-owners, the rules are slightly different. We still have the same limitation for the 8 weeks, the 15,385, but for the full 24 weeks, they're allowing us to count the full 24 weeks annualized for $100,000. So you can go all the way up to $46,154 for the non-owner employees. On top of that, you can include their group health insurance, their retirement plan contributions made on behalf of non-owner employees with no limitation. So that's significant money that you can include for your non-owner employees. And the SBA explained in some guidance the reason why they didn't place a limit on this for the non-owner employees is they wanted the owner employees to basically receive forgiveness for the amount that they receive credit for on the original loan application. They're trying to match up those numbers. They don't want the owners to rely upon one of the exceptions that they couldn't open up their business back, and therefore they didn't have to keep the same level of employees, and then receive a windfall by being able to receive $46,000, the 24 weeks of $100,000, when they really only should have received $20,833. So it's an incentive just for people to keep their employees on the payroll and not have a windfall to the owners, is the idea behind these mismatch in the numbers.
But Brandon, the interesting thing there is that the loan amount, if we all remember, the loan amount was based on 2.5 months of payroll. So in essence, now they're giving us 24 weeks of payroll for all of our employees. So it doesn't really make a lot of sense that they limited it for an owner employee, but they didn't limit it for a non-owner employee. I understand why they did it. They saw that an owner could take advantage of the situation. But it is interesting that we are allowed to count more payroll in the forgiveness than we were ever able to count in the loan application. Seems to be a lot of the emails I'm getting from people seem to be confused by that. They don't understand why that was allowed. And I think it was just based on the fact that the SBA, or really Congress, was getting so much feedback from small businesses telling them they didn't have enough time. 8 weeks wasn't enough time to use up all of the money. I think they went from one extreme to another. They went from not enough time to way too much time in most cases. Most of the people that I've dealt with now who are projecting out their payroll, the vast majority of them use up the loan proceeds far before the 24-week period occurs.
Okay, I'm going to just go through this one time for folks who may have been confused. If you file a Schedule C, which we call an independent contractor or a sole proprietor, then when you file your application, you use your 2019 Schedule C net income from line 31, and you multiply that by 2.5 and you divide it by 12. And that is your loan amount, assuming that you don't have other employees in the business. And then when you file for forgiveness, as long as you're still living at the time you file the application for forgiveness, you're considered to have paid yourself 20.833% of the 2019 payroll, which was the same amount that you borrowed. So now, some independent contractors accidentally borrowed more because the bank didn't realize it. We didn't realize it. The regs were very vague, and you were not supposed to borrow based upon your health insurance and retirement plan contributions for last year. If you did, and you decide to keep that money, which I think 99% of the people are, that was the government's mistake, not yours mistake. Then to get the forgiveness, you're going to need more than 20.833% of your 2019 net income amount. And for that reason, you're going to have to pay some money for rent, utilities, insurance, for expenses you had last year, or hire an employee for a while, and that money can count towards forgiveness. So that's where you stand as an independent contractor. By the way, you should talk to a reputable CPA or lawyer about this to make sure you do it right and understand it. Now, if you're the owner of an S corporation, and most people on this call and most people you know are owners of S corporations, then for your own compensation that you take out as W-2 income during your testing period, whether it's 8 weeks or 24 weeks, whichever you select, you can use up to 20.833% of your 2019 W-2 income, but no more than that. And for people who make 100,000 or more, that's 20,833. Now, you get to 20,833 at 10.6 weeks into the period. So a lot of borrowers are going to fill out their applications at the end of the 11th week, because that's when they get to their 20,833, as opposed to being limited to 8 weeks income at 15,385. And your health insurance on an S corporation tax return goes in your wage amount. So if you had a $98,000 wage amount and $5,000 worth of health insurance paid for by the company, then your W-2 says $103,000. So that extra $3,000 of insurance that puts you over 100 is not counted. Unlike the independent contractor, if you're an owner employee of an S corporation, you can count your retirement plan expenses. We think anything paid during the 8 weeks or however many weeks you chose can count against it. But in the easy forgiveness application, it says you can only count 2.5 months of 2019, 20.833% of your 2019 contribution. Now, for your non-owner employees, if you need their compensation to make the forgiveness, then you're limited to $46,154 if you go 24 weeks, or a portion of that depending how long you go. So you get to 10.6 weeks, you say, I got my whole $20,833. How much do I have for the employees? Is that enough? It's not enough. Okay, I need to go another week, another week, another week until I get to full forgiveness. And that's what this chart summarizes for you. Page 15 is the same darn information, just in a different way. So you can review this on your own. Sorry, but we couldn't fit it all into the chart. There's a couple of asterisks here, but the same thing I just said for page 14 and what Kevin said is what applies. By the way, you have our email addresses at the bottom of each of these slides. If you have questions, we are interested in looking at them. As I always say, send the hard ones to Kevin and Brandon and the easy ones to me, and everything will be fine. Brandon, what do we have here on page 16 to pick up with 9 minutes remaining?
Yeah, I think it's the same thing. I'm going to go forward just a little bit to some of the questions that we've been getting on this amount. And one of the questions, if you have multiple companies, say you had 3 S corporations that you all applied for your loan for, those S corporations had employees, you pay yourself over $100,000 from each of the 3. Am I limited to $20,833 across all 3 of those businesses, or do I get $20,833 under each business? And we think that you get $20,833 under each business, except there's this little sentence in the new interim final rules that say that this applies in total across all businesses. And this is the first time we've seen or heard of this limitation. So it's not entirely clear whether you get it across all businesses or you just get it in total up to the $20,833. Kevin, I know you looked at this with me as well. Any thoughts on that and how you're interpreting this?
Yeah, right now, Brandon, I'm interpreting it that if you got a loan based on multiple payroll amounts to the same owner from different companies, then I think you still follow that logic that in the application for forgiveness, you include the owner's compensation up to the caps per borrower. You notice it says in total across all businesses, not all borrowers or affiliated borrowers. Maybe that was just proper or improper or poor technique with respect to drafting this. I'm not sure, but until we get better guidance on this, I would still follow suit with if my forgiveness application, if my loan application was multiple companies and I had multiple companies paying the same owner payroll and I got a loan based on that, I would still apply that for the forgiveness application for the time being.
Yeah, and when I first read this, I took it as in total across all businesses, meaning they were saying that this applies whether you're a partner in a partnership, whether you're an S corporation, whether you're a C corporation. Right. And then we had a couple of comments that it could apply to limit you to just $20,833 and across all businesses that you owned. So it's a little unclear, but just wanted to point that out as a potential limitation that we could potentially be aware of. Another question we're getting is for your non-owner employees, you have up to $46,154. Do you have to go the full 24 weeks to count this, or is it just a weekly portion? If you're at 12, 13 weeks, is it some prorated amount? And we're unclear on this as well. As Alan mentioned, I think, to be on the safe side, you may as well just extend that loan period out a little bit further and just use the per week limitation. But if you paid a bonus out, it might count, it might not. I just don't know that we know any clear answer here. Kevin, you have any additional thoughts on that?
I agree with you on that, Brandon. We don't. We're in the dark here a little bit. I believe that if you've used up all the loan money, and say you have one employee, let's say you're at 12 weeks, and you have one employee that is actually at the 46,154 cap, then you might have a problem. We'll have to see how that goes. Remember, you and I talked about a week and a half ago about the fact that I think the SBA, really all they care about is if you've used all the money, you can apply early. And I believe that the implication is if you've used all the money, you used it on qualified expenses based on the caps that they've given us. So maybe they're never going to rule on this. Maybe we're never going to get any further guidance on this. So I think if you're a small business and you want to apply early, which I do recommend, say at the 11-week or 12-week mark, and you've got some employees that maybe their compensation exceeds that weekly amount you've got here on the slide, but not the total amount clearly, I think I'd still put in the application for forgiveness. For the most part, we know the banks seem to be, or the lenders seem to be telling us that the applications are going to be really up and running like the first week of August now is what it appears to be. So we have a little bit of time to figure out if we're going to get that or not. And if we don't, then maybe we just have to extend our period a little longer to use up the rest of the money based on reduced caps.
Yep. Yeah, I agree. And then the same question related to health insurance, and I think this one's a little more clear, is that you're going to get credit for what you pay during that 24-week period, since it's not subject to any compensation account. Specifically for your non-owners, for the owner employees, you run into some cap issues, whether or not it exceeds the amount for S corporation shareholders. But for non-owners, if you paid it in that 8 weeks, I think you're going to go ahead and get credit for it. Kevin, you want to touch briefly on these exceptions, then maybe we'll flip it over to you to show the spreadsheet?
Sure, absolutely. First, before we even talk about FTE reduction exceptions, let's just talk about the fact that you should really start with what I keep saying is the 3 safe harbors, even though technically there's only 2 safe harbors. So if you don't qualify for the EZ form, then you've got to count your FTEs. And then it's going to become really important that you focus on these exceptions. And that's one thing where I think the worksheet, the Excel worksheet we've got helps, because you can enter the amounts for all these exceptions to calculate what your FTEs are. And Brendan and Alan, I worked with a client yesterday that has been using the worksheet. They are a family of franchised restaurants. And we learned very quickly yesterday how important these FTE reductions are, because they were really kind of ignoring them. And once I started drilling down with the different FTE reduction exceptions, we ended up increasing their FTEs by about 20%. And it took their FTE reduction quotient from about 70% to 85%, which is going to result in 100% loan forgiveness. So don't ignore these, everybody. But generally, the FTE reduction exceptions tell us that we've got different time periods that we need to look at with respect to the employees and what they were, whether they left or whether they were terminated for cause. So, for example, termination for cause is a FTE reduction. So, if during your covered period you terminate a full-time employee for cause and you've documented that in their personal file, you can still count that person as if they were there. If you let somebody go and then you try to rehire them and they reject the rehire offer, you can still count them as if they were here. I've kind of joked with some people. They asked me, well, what do we call these people? And I said, well, let's start calling them ghost employees or phantom employees, because that's essentially what they are. We have a reduction exception for people who voluntarily resigned. Get it in writing, folks. Make sure that you document that. Employees who requested a reduction in their hours, I'm seeing a lot of that, particularly with parents of school-age children who had to go from full-time to part-time. So if you had a full-time employee back in 2019 and he or she are now working part-time because they have to take care of their child at home, they still get counted as a full-time employee for the FTE reduction. And then we get into some of these gray areas, Brendan, that talk about employees that we were unable to rehire that were employed on February 15th. We've still not gotten a lot of guidance on what that means by unable to rehire. So it's a little bit of a gray area. And then the other one is people that we were unable to hire because we couldn't find a similarly qualified employee. So let's say you're a CPA firm, you had to let one of your CPAs go. Now you're willing to rehire them. They don't want to come back and you can't find another CPA to take the job. You can still count that phantom employee. So there's a lot of different exceptions here. And what I keep telling people about this, you guys, is that it really took the teeth out of the law, because the CARES Act originally didn't have any of these reduction exceptions that we're talking about included in the forgiveness process. So it's really changed the FTE conversation a lot. And I can't stress enough, don't ignore these. A lot of people are saying, well, I have 17 employees now, I had 22 last year. That's real numbers. A lot of people are doing like head counts, but the problem is, why are those 5 people gone? You might find out that 3 or 4 of those 5 people are gone because they are for one of these exceptions. So Brandon, that could make a big difference.
Yeah, absolutely. Good point. All right, if we want to, Matt, if you want to flip it over to Kevin's screen, we'll let him show the spreadsheet here for the last couple of minutes, and then we'll let everyone go.
Hopefully you can see it. I just got to expand it. You can see it, Brandon?
Yes. Yep.
Great. So the spreadsheet, I'm going to be really quick with this, you guys. The spreadsheet has a landing page that we update whenever there's an update to the spreadsheet. We'll put little notes on here. You can see that the most recent version of the spreadsheet was updated for the June 22nd IFRs. The header on every worksheet will always say what the status is of the worksheet. You can see this one is version 1.9, which was actually updated on June 17th. And then a small tweak was made on June 22nd for the IFR. And really the only significant change that was made was allowing for the increase in the, or decrease in the number of weeks in the covered period. The worksheet has a section for the 8-week calculations, which we still know exist. It's got the easy form on it now, with the language in the easy form on whether or not you can qualify for that. So it's pretty straightforward as far as that's concerned. And then we've got the 24-week period. And the 24-week period is the worksheets you would use if you're not doing 8 weeks, but you're doing more than 8 weeks and up to 24. And the only thing we really added was a cell here to say, well, how many weeks are in your covered period? And you'd put that number in here because it affects some of the calculations. So in this case, it defaults to 24 until you actually put a number in. So Brandon, that's really quickly in a nutshell how the worksheet is laid out. I am going to be doing a webinar on Friday for those people who are have hit or are past their 8-week mark. So we're going to talk about that a little bit further. We're going to talk about whether you should do 8 weeks or go on beyond 8 weeks. And we'll get into the spreadsheet a little bit more in that webinar as well.
All right, well, thanks, Kevin. If you're interested in purchasing the spreadsheet, you can go to pppexcel.com and it'll take you to the link to download the spreadsheet. Whenever we make updates, we'll send out a notification, and you just go to that original link where you downloaded it, re-download the spreadsheet, convert your data, just copy and paste it over into the new version, and you receive that update for free. So if anybody has any questions that you want us to address in future webinars, feel free to email those to us. We'll try to get back to you as quick as possible. And thanks for joining us, and we will see you again for future webinars.